For market levels report on this Friday, the 28th of September, start with Euro. We take a look at Euro. Euro was able to trade down, just down to the 2840s area. At the time, we did unwind. Recent buyers let go. So delta volume distribution moved just a little bit lower prior to that. As the market was trading lower, though, we were getting accumulation. So buyers did buy the last pullback. So we had market order buying, absorbing the pullback. So the market then lifted off this area and had what I called a supply and demand shift. I talked about this yesterday. I said, see how the delta is going one direction until we really change some directions. That'll be a supply and demand shift. That'll be the first evidence to me that we're finally getting participants from much higher pricing levels buying to cover and cashing out. So really, as this market was hinting that it was going to start trading two recent lows or below, buyers started to come into that contract and started buying it heavily. As the market lifted off the area, I'm sure the order book got thin on the offer side, and the market order buying then didn't have any challenge or resistance from limit order activity, and we get a very linear bounce out of that market going completely out of balance on the open interest ratio again. So a little bit of buying comes in, market gets sellers, and we trade lower. That pullback starts to get absorbed, and we have a nice bounce. So we have over 100 pip bounce. We trade all the way up to the 2970s area. And since then, now we've been getting a little bit of selling, and the market's bled off a bit. So very, very nice rally out of the supply and demand event of a open interest ratio at extreme out of balance. Euro does come up, unwind some of the sellers from previous levels. We're still holding sellers, though, tied to this this 2980s area. We still have short inventory that I've talked about in previous briefings, all holding in that area. That's the key area. Any challenge to that 2980s area could cause additional pretty strong short covering to come into the market. Other than that, we'll see if the euro dollar can hold up or if we just trade back into the range. Any new recent buyers in here that are directionally long, if they don't see this market holding some of this rally and we start bleeding off in the euro, wouldn't be surprising to see some of this long inventory that's come into the market to the buy side start liquidating and we fall back into the range. So we'll see how the euro reacts to the US cash session, the equities action. We'll go take a look right now at the S&P 500 E-mini. ES, very nice short covering rally. We came back up into the range. This is the area I said I wouldn't really be willing to be a seller until we traded up to this level or higher. We did trade up to this level, and the market is getting some sell response and bleeding off back into the previous range. Now the key here is we do have a lot of buyers. As you can see, buyers absorb this 1430s area, 1430s, 1431s. So any trade back to that area will be testing the commitment of those buyers that came in off that level. Key levels on the day will be this 1430s, and then our lowest held level of long inventory down here off the 1424s, 1425s, 1426s area, all the buying that took place on this prior day. We now have sellers that have been selling into trade up to the 1444s. We did perfectly tag out and neutralize this pricing level. So anybody that's been short from this point in time going forward liquidated. They cashed out. They bought the cover into the rally. And you can see anybody that sold 1450s from before or in this area, they were able to let go of any last positions profitably. They let go prior to the market trading to their pricing level or above. So that was a last cashing out unwinding. Once we neutralize that level, the market stalled, and now we're getting sell response, buy response, sell response. Net effect is the market's driving back into its lower range. Key levels for today will be overhead resistance at 1444s area, buy support off the 1430s, 31s, and then if we trade lower and the market gets affected by equity selling, if we do get equity selling today, then wouldn't be surprised, since a Friday coming into a weekend, we could definitely get some long liquidation unwinding and could easily come back down to the lower side of the range today and even possibly trade lower. Now that there's no inventory being held here, the next short inventory that's holding is off the 1457s on up. Probably going to have to get a bit higher before we really challenge those participants that are holding short inventory to the point where they may feel like they need to start buying to cover. That is the S&P 500 for today. Next, let's take a look at gold today. Okay, looking at the gold contract with the most volume, we can see we have buyers came in here towards the end of August. These buyers came in right off the 1640s area. So far that long inventory has been holding. So we had a nice move and then we got a bunch of cashing out. Buyers are still holding some inventory off of, or buyers next came in and started buying the 1720s as we stair-stepped up. We were still holding some of the long inventory from lower levels, so we didn't have all these directional buyers cashing out yet. This level, the buyers that came in at this point have gone neutral. So we got trade even higher and into the pullback. Buyers from this point going forward cashed out. Into any newly initiated selling and any previous long holders, the net effect of the selling, I don't have any evidence that there's anybody of any significant position size holding long liquidity off the 1720s. Currently, we have inventory holding all the way down here off the 1640s, long inventory, just a little bit. We have new buyers that have come in here off the 1738s, 39s area, it looks like, into 1740s. We've had new buying coming in, and we have the next key area is overhead sellers that have sold this area price. We'll take a look at that. That's the up around the 1790s. So we have a bunch of sellers that have sold at 1790s. So obviously if we come up and start knocking on the door here, we have all this short inventory holding. That's going to test the conviction of those that are short from the 1790s area. We could unwind, break up, and easily get up to the 1800s if gold presses higher through this area and these participants start to fold them or start buying to cover. So key areas in gold is this looks like 1738s to 1740s area where buyers came in. I doubt this would get affected on the day, but of course we do have long inventory holding still tied down to the 1640s area. I don't think that inventory will come into play much today, but this overheld short inventory up here tied to the 1790s is critical. Any run up in price testing that area, we could get a breakout to the upside built upon previous sellers starting to buy to cover. That is the story in gold. Quick look at the November contract in oil. That has the heaviest volume. The CL contract, you can see volume started to come into this contract here about the 17th, 18th of the month. Had big buying coming in off this trade right around the 91s. Market has traded lower. Buyers came back in, so we've had buying and more buying. So buyers absorbed and bought the pullback to the 89s level. So the key here with the trade above the 91s, anybody that bought 91s area on up in this area before, they now have had the market higher. So if they bought 91s and above and 89s and above, they have the opportunity now with the trade above the 91s to let go of previous long inventory. So far in the new buying, I haven't seen any big cashing out yet. If oil starts trading back a little closer to 91s, we might get some long liquidation hitting. So the net effect is large liquidity participants that bought 91s on down, most likely as we trade to the 91s area or below, they might start letting go of previous long inventory they brought into this market. So 91s is kind of a key area, kind of an over-under level where we may trigger long liquidation. We may also keep getting some support in the 91s. Buyers that bought this area before might keep coming in, buying it, and trying to drive price up away from that level. A lot of new buying came in here from 89s on up. Strong buying. Previous sellers off this 93s and change seem to have let go. We have a situation here where the market is lower than before, previous pivot, lower, delta is higher. So really, from this point in time going forward, smart money has been a buyer in this contract. They're probably getting ahead of hoping that the overall markets trade higher, that the euro dollar keeps going higher eventually and the US dollar goes lower, and then being long in oil would be the smart play. The market should keep trading higher. So for some reason we have a lot of buying going on in oil. They've absorbed 91s to 89s, but the key level will be the 91s. We trade below it, we could start getting portions or substantial amounts of this long inventory starting to unwind. There's no real short inventory, much of any, held in this market. We have newly initiated selling that's just started to come in here. Looks like about off the 92.60s area, 92.70s area maybe, and on down. And that's about it in oil. Oil, since it's a newer contract, just starting to get a lot of volume. In this November contract, we have a very narrow price range and a fairly narrow volume distribution, delta volume distribution. So we'll continue to take a look at gold and oil into next week, and that is the current picture in oil. And this was our market levels report for Friday, September 28th.